What's going on, guys, and welcome back to another video, and welcome to your daily news report for Friday, September 2nd. Now, today we need to go over the very important jobs report that just came out this morning. Want to address the new numbers, the new unemployment rate, the jobless, the payrolls that rose. Again, we got some changes here, but want to address what's happening and what we could actually see the Federal Reserve do because of the report that came out today. Also going to address a Labor Day travel warning. The expectation, according to AAA, is that more people are going to be traveling. Want to address where they're going to be traveling, or kind of the means of transportation. Also, want to address how this is actually going to impact gas prices. And then we got a little bit of an issue regarding U.S. oil production. So again, that's what we're going to discuss in today's video. If you have any questions on any of this stuff, please ask your questions down in the comment section below. All I ask, spend just 2 seconds, go ahead, hit that like button for the YouTube algorithm, and let's begin. Now, the new jobs report came out this morning, and for some it was a little bit shocking. However, it kind of fell in line with my expectations. I was pretty sure we would see unemployment rise. Well, we did. I was pretty sure we would see payrolls increase. We did. Now, we did see some industries that lost jobs, but again, they didn't see as many jobs lost as the Federal Reserve is expecting. The Federal Reserve wants to see all industries losing jobs, as this would actually kind of slow down wages and it would help tame inflation. But that's not really what we saw. These are the industries, though, that did see losses. It was cars and parts, coal mining, heavy construction, furniture, warehousing, legal services, and local government education. Now, local government education would be a public school teacher. We are seeing a lot of school teachers leave their job. They don't want to do it anymore. It's just too much. The stresses of being a public school teacher, okay? The wages that come with it, is it worth it? For some, the answer is no. However, there is some good news here. We are seeing that the average hourly earnings, they came in lower than expected. The expectation was they're going to come at 0.4%. That was an increase. They actually came in at 0.3%. Less than expected, but it's still a gain. So I don't anticipate wages are going to decrease, but we cannot see them just explode. If we see wages explode, again, 0.3% annualized is what, 3.6%? So it's not huge. It's not over inflation, which is 8.5%. So that's some good news there, is we're not going to see a wage price spiral, but wages are still going up, all right? So let's just keep that in mind. Let's get to the headline numbers, which I feel aren't as important as some of the key points in the data that we've already discussed. But unemployment rose from 3.5% to 3.7%. And if you look at that headline number, you're thinking, okay, what's going on? People are losing their jobs. This is not good. Well, this is exactly what the Federal Reserve wants. However, there were more people working. Payrolls increased. They didn't decrease. So how did we get unemployment to go up as payrolls went up? Payrolls would have to go down to see unemployment go up, right? So how are we getting all this? What's going on here? Well, if you read into it a little bit and you look at the numbers, the key data, the key points here, the reason isn't because most people are losing their jobs. It's the fact that the labor force participation numbers grew. That's the reason why. People are going back into the workforce and searching for a job. And one of the things that we noticed is that unemployment in those that are looking for temporary work due to the economy, okay, economic reasons, that actually grew. It went from 6.7% to 7%. So people that are, let's say, elderly, that just can't get by on Social Security benefits anymore, well, those people are now starting to come back into the workforce to try to find a job. And as they come back, that's what pushes up unemployment. So what we are expecting to see now is something I said we would see if things got really bad. Okay? If things got really bad and people could not afford to pay for their, electricity bills, their rent, their food, medications, things like that, what's going to happen is people that were on Social Security and retired, they're going to come back to work not because they want to, because they have to. It's just a way to live. They have to come back. So because of that, that's what's going to push up unemployment numbers. The other headline number, payrolls increased by 315,000. It was estimated they would increase by 297,500, but increased by a little bit more. So some good news there. Now, one thing I just want to say is that the Federal Reserve is likely to come out and raise rates again. Okay? Some were expecting that if this number was too hot, which I don't think at 315,000 is too hot, going from 3.5% unemployment up to 3.7%, I don't think that's such a huge jump. But my expectation is that we're going to see the Federal Reserve, and this is going to come out on September 21st, I believe. I believe that's the date. That's when the next FOMC meeting is. But the Federal Reserve is going to come out and be like, you know what? We need to raise rates. My guess is it's going to be between a 50 basis point rate hike and a 75 basis point rate hike. That's my expectation. There's probably more of a possibility it's going to be a 50 basis point rate hike than a 75, but 75 is still on the table. So once we get more information, especially on inflation, and that's going to come out, next week? Once we get that information, that's going to be huge. That's going to really tell us what we should expect moving forward. Now, let's talk about Labor Day travel, because this is something that a lot of people are doing. A lot of people are traveling for Labor Day. That's something that I'm not going to be doing. I'll be staying home, not going anywhere. But according to recent reports, there is expected to be more travel this year than in 2021 over Labor Day weekend. Now, we are expecting domestic travel to actually tick up, which includes air travel, cars, cruises, hotels, and tours. This is expected to be up 22% from last Labor Day. We also know hotel searches rose by 19% year over year. Flight searches rose by 15%. Even searches for VRBO jumped by 25% since 2019. So we are seeing an increase in travel. That's good news. That means we are kind of expecting to get back to normal very soon. But again, there's still that chance we see more positive cases this coming fall and this winter. As of right now, we are expecting to see more people travel because this is the final long weekend of the summer. And many Americans are pointing to the fact that they can finally afford to travel now. Not because they've saved up all their money from the summer. No, it's because gas prices are looking better. Because earlier in the summer, I believe the middle of June, gas prices were nationally, the average was $5.01 per gallon. As of this morning, gas prices are now $3.81 a gallon. That's average here in the U.S. So that's why some say they can travel now, as they can actually afford to. They can drive to the airport. They can drive to another city. They can drive wherever they want to because gas prices are down. Now, let's talk about U.S. oil production. Because now that we're talking about gas, let's break down the warning that we have recently received. And that is that U.S. oil production is getting held back due to the frac gear being in short supply. Now, according to multiple companies, they're not resorting to purchasing new gear when it comes to fracking because they're actually choosing to recondition existing equipment. Now, in previous wells, the fracking equipment, you need about, I think, 20 different pieces of equipment, or 12 different pieces of equipment. Now, according to reports, you need 20. Now, the reason is very simple as to why companies are doing this. And one executive said the reason why they are repurposing the gear for fracking is actually because they don't want to pour millions of dollars back into their business, especially with a possible economic turn coming very soon. So we're not just seeing people in the media, we're not just seeing the average American thinking, yeah, we might be in a recession, things are looking bad. No, executives are saying the exact same thing. And when oil executives are telling us, yeah, they're not going to pump millions of dollars back into their business just yet, that's something that we kind of need to hear the warning signs on. We need to listen to that. So yes, oil prices are doing pretty well, but there's a lack of fracking crews, and they believe that the U.S. cannot meet production or their production forecasts for this year. So that's somewhat troubling as well, because gas prices are coming down, right? We're doing very well, or doing pretty good so far. But the problem is, what if we cannot meet demand? What if our supply just doesn't meet demand? Well, if we have less supply and a lot of demand, it means prices are going up. If we have a lot of supply and low demand, prices are going to come down. So, got a little bit of a few ways to go there. Now, let me just explain some numbers to you really quick. And what we are hearing is that currently there's 264 fracking crews, operating on U.S. oil fields as of right now. The problem though, and this has been a consistent problem, it's not something that just popped up all of a sudden. So the problem is that this number, 264 crews, is 42% less than what it was back in 2018. So not only is production down, fracking costs are expected to jump this year an additional 27%. So they cannot produce as much, and yet their costs are actually increasing. So that's one of the reasons why they are hesitant to put more money back into their business. So as you can imagine, these are different times, and this is causing many new issues. But again, that's what's happening. And I've been warning people on this for a while, is that we have seen our supply chain issues. Our supply chain's been just completely disrupted. And a lot of it's due to China. China cannot produce what they used to do. And with a no tolerance, zero policy, and once they get positive cases, just like the other day, I explained how the capital city in the Sichuan province is locked down until Sunday. That means 21.2 million people are just locked in their homes for 4 days as they do citywide testing. Well, this is one of the leading cities for auto parts and electronics. And so as we see one of the leading cities that produces auto parts getting shut down, well, guess what? We need parts here in the U.S. I can't get them, sorry. Or they're not being manufactured, not being produced just yet. You'll have to wait another week, and possibly they'll start producing them again. That's kind of what we're seeing. This is the warning I've been giving people for a while, is don't wait, because things are going to get bad, and as they do, we need to be prepared for it. All right? So that's what we know at this time. As always, as I know more, I promise I'll come back on and share all latest news and updates. Again, just want to thank you guys for watching. Have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.